Silver has long been considered a hedge against inflation, with many investors viewing it as a tangible asset that retains its value during economic uncertainties. However, a closer look at the dynamics of stacking silver reveals a fallacy in the belief that it serves as an effective inflation hedge. In fact, the premiums associated with silver may counteract the very purpose investors seek when acquiring precious metals. One of the primary reasons investors turn to silver as an inflation hedge is its historical resilience in maintaining value. However, the reality is that the price of silver includes not only the intrinsic value of the metal, but also premiums charged by dealers. These premiums, often reflecting supply and demand factors, can substantially inflate the cost of acquiring silver. Consider this scenario. An investor purchases an ounce of silver when its market value is $30 per ounce. However, due to premiums, the investor pays $35 for that ounce. In this case, a $5 premium has already been factored into the purchase price. If the investor decides to sell the silver back immediately, they would only receive the market value of $30, effectively losing the premium paid. A more pragmatic approach to silver investing lies in viewing it as a means to secure spending power rather than solely as an inflation hedge. Take, for instance, the comparison between the cost of a gram of silver and a loaf of bread. If a gram of silver is worth $1 and a loaf of bread costs $1, the purchasing power is maintained. Looking ahead, if inflation causes the price of the loaf of bread to rise to $3, the gram of silver that was initially bought for $1 may likely have increased in value to $3 as well. Selling the silver to a coin shop would then yield $3, enabling the investor to purchase the bread for essentially the same value they initially paid. In conclusion, the belief that stacking silver inherently protects against inflation is a fallacy when considering the impact of premiums on the purchase price. However, by recognizing silver as a means to secure spending power, investors can leverage the precious metal strategically. Silver's ability to retain value over time, especially in comparison to fiat currencies susceptible to inflation, provides a practical approach to wealth preservation. While caution should be exercised in navigating the premium-laden silver market, understanding the dynamics of pricing and strategically timing transactions can help investors make more informed decisions. Ultimately, buying silver should be seen as a tool for securing spending power in an ever-changing economic landscape rather than a foolproof hedge against inflation.